Here is your Milwaukee County real estate market update for November 2025. This month, we're seeing a gradual cooling as we head deeper into the winter season, but the market is still showing strong fundamentals. Let's take a look at what the data is telling us. Overall, the market is cooling at a steady and healthy pace. Home prices are still rising year over year, sales activity remains productive, inventory is tight, and mortgage rates are stable in the mid 6% range. The combination of steady prices and limited supply continues to give sellers an advantage heading into winter. Now let's break down the core metrics. The median sale price this month is $296,000, which is a 10% increase compared to last year. Days on market have increased to 22, giving buyers more time to evaluate homes, while sellers still benefit from strong equity gains. Active inventory has climbed to 1,210 homes, which is slightly higher month over month, but still low enough to limit competition. Homes are selling for 98.2% of list price, and months of supply is holding at just over 2 months. Rate stability at 6.22% helps both sides plan more confidently. Let's take a closer look at affordability. The median household income in Milwaukee County is $63,304. Using a standard 28% debt-to-income ratio, that supports a housing budget of about $1,477 a month, which equates to a purchase price near $240,000 at today's rate. But with the median price now at $296,000, buyers face a $56,000 affordability gap. Compared to last year, prices rose $27,000, while rates improved slightly, meaning affordability worsened year over year. Now let's look at how rates have been moving over the past 12 months. The current 30-year fixed rate is 6.22% as of November 20th. That is down 2 basis points from last month. Over the past year, rates range from a low of 6.17% in September to a high of 7.04% in February. With that in mind, let's look at how today's rate affects monthly payments. For a $300,000 purchase with 20% down, the monthly principal and interest payment at this month's rate is $1,474. Last month's rate would have resulted in a payment of $1,476. That is a difference of just $1.85, showing that small rate movements have very little impact on monthly affordability. Now let's break down how different price ranges are performing. Under $250,000, inventory is extremely tight and competition is strongest. Between $250,000 and $350,000, demand is high and the market remains balanced but competitive. From $350,000 to $500,000, inventory is growing and buyers are gaining leverage. Above $500,000, days on market are longer and negotiation room is increasing. Let's look at the broader opportunities and risks across the market. This winter season creates opportunities because casual shoppers usually step out, leaving motivated buyers in the market. The best buyer leverage is above $500,000, where inventory is higher and negotiation power is shifting. Rate stability helps both buyers and sellers plan their next steps. On the risk side, competition is highest under $350,000, and overpricing is a real concern in the upper price bands. The affordability gap continues to be the main constraint for median income buyers. Now let's discuss strategy. For buyers, slightly more inventory and longer days on market create better negotiation opportunities, especially in move-up and luxury price points. For sellers, homes under $350,000 still move quickly, and pricing correctly is the key to strong results in the mid to upper tiers. For investors, strong year-over-year appreciation and high rental demand make this a healthy environment, with value-add deals starting to surface in higher segments. Let's take a quick look at the numbers all together. Here are the core stats for November. The median price is $296,000. Days on market are 22. The sale-to-list ratio is 98.2%. Inventory is 1,210 homes with 2.1 months of supply. New listings total 765 and closed sales landed at 573. The mortgage rate sits at 6.22%. Now let's take a look at what's happening in the news. Local headlines continue to highlight steady price growth heading into winter. Mortgage rates are stabilizing as inflation cools, which supports more predictable budgeting for buyers. And the Southeast Wisconsin mid-tier market is showing early signs of balance, especially between $350,000 and $500,000 as inventory rises. Let's wrap things up. If you are planning to buy, sell, or invest this winter, A tailored plan can help you take advantage of these shifting market conditions. You can schedule a consultation with me anytime at calendly.com/Lucas.Murphy REI. I look forward to helping you make the most of this market.